Hello, guys.
Hi guys, so today we have met for another TMR
TMR
Talk,
Talk, Season 2.
season 2, yes.
Yes, yes. And
And
today we are going to start with
commodities.
commodities. Perfect. So, in India, especially in India, the large number of traders and investors, they are doing their work in equities, correct?
Right,
And there
right.
is common notion that equity is the common notion.
Yeah, the most famous financial market in India is the Indian stock market.
Stock market, correct. But the thing is, why we have chosen commodities, because we are seeing a huge growth, not in terms of prices but in terms of markets also and opportunities also.
Yeah,
Whether be it professional opportunities or money making opportunities, huge growth in commodities market. That's why we are going to talk about commodities today.
absolutely today. As the title suggests, not just equities, commodity markets can also make you money.
Yes, huge,
And
big time money.
huge money, big time,
Yes.
big time.
What's the leverage, Chanak?
So in commodity market, the leverage is around 1 is to 20 as
1 is to
compared to
20.
equity, where equity futures where the leverage is 1 is to 10. So that just tells you a bit about how risky commodity derivatives are. But it also goes on to tell you that it is very, if you know the game, it can make a lot of money for you.
Both sides, correct? It's
Yeah.
risky also, but opportunities is immense. So how many of you, so I know, how we got in touch with commodities market, because we started our career with commodity market, correct?
Absolutely,
And
absolutely.
that too in heyday, correct? In silver day.
Yeah, in silver days. In 2012, when silver hit a peak of 72,000, that's when we were just beginning in the commodities and we witnessed and participated in the entire crash which was there of the silver
Crash,
market.
definitely, from
Yeah.
75,000 to 30,000.
To, yeah, 33,000 levels. Yeah.
Yes,
So,
commodities.
having said that, so recently SEBI has made a lot of changes
Correct.
in the Indian commodity market. SEBI and the
MCX.
yeah, MCX exchange, which is there, and options trading has begun in the Indian commodity markets.
Perfect. So, crude oil options, they are already up and running. Now they have launched copper,
Crude oil and gold options.
gold options,
Yeah.
correct. Now they have launched base metal options also,
Wow,
and
wow.
it's
This
it's
is
going
a
to be
recent
huge.
one. Yeah.
Yes, and next thing is they are now allowing FII
Yeah.
to
Right.
enter into our commodities market. That will
Absolutely.
make this market much more
Liquid, and
liquid.
it'll increase the depth of the market.
Perfect.
And another thing is that the timing of Indian market is such that it starts at 10 in the morning, which is before global Comex market
Perfect.
begins, and it closes at 11:30 in the night
11:30 or
or
12.
11:55,
Correct.
depending on
Time
the
zones.
daylight
Hmm.
savings and all. But the idea is that it closes 30 minutes after Comex closes.
30 minutes after Comex closes.
Right.
It's a huge thing. For those guys who don't know what is Comex, Comex is a US commodity exchange.
Yeah,
Correct?
and LME is London Metal Exchange. Now,
Yes.
these are major markets which
They
you
are
should be
price
aware of.
deciders,
Yeah,
correct, of this world.
yeah. So the prices of Indian commodity markets are majorly dictated by these global commodity markets. Not only
And
that,
then currency effect,
yeah,
correct, tax effect. That's
yeah,
it.
yeah, that's
Perfect.
it. So your currency effect and the taxes are your import duties, custom duties, excise duties, everything that is levied additionally in our country. That is the domestic factor which gets added to the global prices, and we get our
Prices.
basically, yeah,
So, for example, let's say gold is trading at $1,300 per ounce.
yeah,
Correct.
1,300, yeah, dollars per
Yeah, for
ounce.
example,
Yeah,
$1,300 per
close
ounce.
enough.
Close
Yeah,
enough, yes. So 1,300, then we will take our currency, correct?
right,
We will convert it to rupees,
right.
correct? Then we will add all the taxes, duties,
Taxes,
everything,
etc. Yeah,
and we will get our Indian trading
correct,
price,
correct.
correct?
There is something which they called as cost of carry,
Cost of carry is there,
which
perfect.
is dependent on our Indian interest rates. Okay, and there is a storage cost also involved, which they consider for conversion purposes too.
Perfect, perfect.
Yeah,
So this is it. This is it. But
yeah,
this is bit theoretical and boring stuff.
Exactly.
Now
We
let's
don't want to
talk
talk
about
about that.
real, practical market, practical stuff, correct?
Right.
Now let's start with statement that there exists one commodity expert in every house.
Oh.
There exists one commodity expert in every house. I still remember my mother still even today reminds me of that instance that मैंने तो बोला था 2002 में गोल्ड ले लो तुम लोगों ने स्कूटी ले लिया. Correct.
Absolutely.
So there exists
Absolutely.
gold and silver experts in every house.
You want to know where gold is at it? Ask your mom. Chances are that
Definitely.
she'll get it right.
Yes. What I don't know, Akshay Tritiya, during Akshay
Yeah.
Tritiya time, during Diwali time, correct?
Yeah.
They always talk about a gold le lo. Correct?
Agreed.
But in reality, when our Indian people or our Indian community, be it trader community or citizens, they were amazed during 2005 to 2015 time. Correct?
Yeah.
Because we are used to gold being 2000 to 4000 zone,
Right.
and silver being 7 8000 hardly, correct?
Right.
1 kilo 7000 or 8000 zone, and from there we experienced
An explosive move.
move from 4000 to 35,000 high, correct?
Yeah, that was for gold.
That was for gold, and
And
from 8 9,000 to
72,000.
75,
Yeah.
72,000
For
high.
silver, yeah, insane,
Yes.
insane. And commodity markets, their very nature is such that such moves they keep happening in commodity markets. So the rises in commodity markets are vertical, and the crashes are also vertical.
Definitely.
Yeah.
It's highly volatile. It's highly volatile.
Very volatile.
Very volatile.
Yeah, which is why they have to
give them the example of silver on I think Dandiya Day or Navratri
Oh, yeah,
Day.
yeah, yeah.
Yes.
So when Navratri comes, okay, I think it comes 4 times a year, but 2 Navratris when they are there in a year, the October one and the April one especially, silver goes crazy. And earlier it used to go so crazy that we would have silver hitting 2 or 3 upper circuits in one day.
And it was I think it was that time, a euphoric time.
Yeah,
correct?
in 2012-13 zone.
Euphoric time.
Yeah, so earlier it would hit 2-3 upper circuits in a day, and then when the fall started, it used to hit 2 or 3 lower circuits in a day.
And upper circuits and lower circuits, that means huge quantity, correct? In
Agreed.
terms of rupees, okay, it's depend on that time's price and everything, correct? Yeah, it depends on that. Or 5%, 3%, and 2%, something like
Yeah.
it is the zone, correct?
Yeah, that's the zone.
Yes.
So it's crazy. Approximately 9% is the daily circuit limit which MCX had set at that time.
Now again, question is why we are taking this session today? Why today? Why this month? Okay, why not season 1? Okay, why season 2?
Right,
Why today?
right.
The answer lies in our past. Okay, think about this, guys. From 2002 to 2008, there was an uptrend in
Right.
Indian equities market. Okay, and in the last phase of Indian equities market, gold and silver they started moving up.
Yeah.
Forget gold and silver, all
All
the commodities
all
started
commodities
moving up.
started moving up.
So you can cross check this with the increase in GDP of commodity based nations also. See Brazil, Russia, take any commodity based nation and see their GDP and growth. You will see high level of uptrend from 2005.
I think
4,
we've
5.
got the charts.
Yes, we have got the charts even.
Yeah.
Perfect. So commodity, okay, last time round it started performing in mid or last zone of equity market uptrend, correct?
Right.
Now this time round for our equities market from 6,300 it has touched 11,000, and
Right.
now it is consolidating. That means we are in that zone where commodity should start its fast uptrend. Why we are saying fast uptrend? Because in last 6 months, most of the commodities, okay, they have bottomed out.
Right.
Correct. And that's why we feel that this is the right time to discuss about commodities, because we are we can experience explosive moves in
Explosive
next 4 5
rocket
years.
like move in commodities
Commodities
for the next couple, at least 2 to 3 years.
in next 4 years, you
4 years,
may
yeah.
see silver back at 75,000. But okay, now this time
Or
round,
it may test newer highs.
newer highs.
Yeah.
But there is a one big rider, and that big rider is related to our special fact of the day. We will discuss that at the end.
Yeah,
Okay, silver.
yeah.
But definitely, gold is going to cross its high, all time
Gold
high.
is going to go for a new
Correct.
high.
Copper is going to
Definitely.
cross its high. Nickel is going to cross its high. So that's why today we are discussing commodities. Correct. Now let's talk about, so how many parts are there in commodities? Means
So basically, in at least speaking about Indian financial markets, MCX commodity markets, commodities are divided into three basic categories. That is base metals, energy, and
precious
precious
metal
metals.
and
And then there
agri.
are agro commodities like potato and all those things, which we won't be talking about much
Correct.
because they are not very liquid markets.
And today we are specifically talking about only
Yeah,
commodity, basic commodities.
today we'll restrict ourselves to base metals and precious metals
Precious
because
metals.
we have already had a prior session on natural gas in season
Correct.
one,
Correct.
and we'll have a upcoming session on Aramco pretty soon, which will be
Crude oil
yeah,
discussion.
talking about crude oil.
Perfect.
So, for the sake of not repeating anything, we will focus our discussion today to precious metals and base metals.
Correct. Now, so like equities, okay, because when equity is in uptrend, entire market is in uptrend, you will see all the stocks they will perform in 5 years.
Yes.
Quantum may be different, time period may be different, time of uptrend may be different. Similarly, in commodities, when commodity as a market is in uptrend, you will see entire market performing, be it precious metal, be it base metal. Okay, only these two. So energy is completely different thing. We'll not talk about energies, but you will see all of them they will perform. Gold,
Yeah.
silver, all of them will perform. Now the question is why and how you can relate these commodities with economics.
Right,
Correct.
right.
So we'll start with base metals.
Okay, let's start with base metals. So now, speaking of base metals, we have to consider two, three parameters. One is who is the producer, largest producer, how many, what is the matrix of production?
Correct.
Because in cases, especially like aluminum, we see that the largest producer is China, who makes approximately 31 million tons. And the second largest producer is Russia, which makes 3.5 million tons.
Huge difference.
Yeah.
Huge difference. There is no competition.
Yeah.
Why it is second, I don't know. It should be 10th or 20th. Correct.
So everyone is lesser than that.
Yeah, agreed. But
Yeah.
yeah.
It's
But the thing is, before that, let's discuss about economics and base metals.
Right.
I know the correlation or the rationale is extremely easy, but
Right.
let's discuss about that.
right.
So, yeah.
So-
yeah.
Please go ahead.
Yes. So, it's simple, correct? As economic activity go up, correct, the usage of base metal go up.
Right.
Correct.
Right.
As infrastructure projects go up, economic activity can be anything.
Yes.
Correct. With respect to economic activity, infrastructural projects, there will be increase in transportation project, infra projects, all other kind
Yeah.
of projects.
So
Usage,
whenever
electricity, everything. Correct.
Yeah, whenever any country undergoes a big infrastructural boom, like the
Boom.
one we saw in China a few years
2009 to
2009
2013.
onwards, yeah.
Correct.
So whenever any country undergoes such a big infrastructural
Change with their growth.
of course, it
Correct.
consumes a lot of commodities.
Commodities, especially
So-
base metals. Yes.
Yeah, especially so the growth in commodity markets, which took place in 2009 to 13 in that zone,
China.
right, can be attributed a lot to the Chinese consumption.
Yes, definitely. And if you, we are going to see various. So let's see various commodities charts.
You
Copper
want to
chart.
see the
Yes.
charts of the commodities?
Yes.
All right, let's do
We
that.
need to share that first.
So we need to first just give us a minute. We are a bit new to this YouTube thing, so
Yeah, perfect.
just pardon us for the trouble.
Investing, I guess.
Okay, so you want to start
Copper.
with copper.
Yes.
Copper is our favorite.
We'll see
So
Comex copper.
let's
Yeah.
see the
US
Comex copper
copper.
prices. Yeah, we'll just go straight to the technical chart. There we go.
Yes.
Copper is nice and big.
Yeah, we'll see monthly charts. Okay. And have a look at this, guys. First, 2003 to 2006, there was an uptrend. Okay.
Right.
And here, almost, if you remember, subprime crisis happened in 2008,
Hmm.
correct? Before that, there was uptrend in global equities market,
Right.
correct?
Right.
Global equities market uptrend means global GDPs, global
Yeah,
GDPs, they were
the
also
world
going up.
economy was in a boom
Boom.
and everyone was going up,
So we
including commodities.
perfect. So we experienced first up move.
Right.
Then have a look at this. 2009,
Once the
surprisingly,
global economy meltdown which took
surprisingly,
place, yeah,
correct. Most of the economies they were in recession
right,
during this
doldrums.
zone,
Yeah,
correct. But only one country, okay, only one country that is
yeah,
only one country,
China.
China, which consumes, I think, world's 40% of the copper. Okay.
Yeah,
Only one country, because of that, because of their infrastructure boom, we saw huge uptrend in copper again
hmm.
during 2009 to
13.
2013. Look
Yeah,
at this, 2012, 12 end, let's say 12
okay.
end.
Copper maybe gave up before 13. Yeah,
Yes, but what happened after that? The Chinese economy, it went into doldrums. Okay,
yeah.
it went into
So
trouble, and they stop producing.
yeah.
Correct.
So Chinese economy underwent a very big shift after
2012.
2012
Correct.
13 zone. So it had been done with the infrastructural spending
Consumption.
that they were going to do to the large scale. They had borrowed money from their own corporations and from global corporations for over 100 years. Their borrowings were very high, and eventually,
Banks' balance sheet became huge.
huge.
They
Yeah,
stop investing in their infrastructural projects. Apart from that, as it is, there was that means there was no internal consumption of copper. Apart from that, there was no demand for products from outside because everyone was in a recession.
yeah,
So, and as it is, they produce, I think, world's 50% of the copper. Okay.
yeah.
No, no, no.
No, no,
Pardon,
no.
pardon,
China
pardon.
does not
China consumes. So
consume.
the thing is, once they stop consume, there was a huge supply. There was a huge supply in the market, and
Right.
there was not enough consumption.
Hmm.
It created a oversupply, and because of that, since 2012, copper prices started going down,
Yes.
and it from the levels of 4.4, it hit 1.9,
Yeah, that's
50%
like
drop.
more
So
than 50.
more than
That's like
50% drop.
60%.
And I'm talking about 16. Okay, I'm talking about
Yeah.
2016.
What if it's a Fibonacci level drop?
Let's see, let's see.
61.8%.
So
That would be interesting.
being a technical analyst,
Yeah,
we
we are very
always
fascinated by Fibonacci numbers.
correct. You want this
Yeah,
one,
yeah,
correct?
yeah.
Yeah, yeah. It is 78%.
Oh, it's a
Wow.
78.6.
Wow.
Villa number 786.
786. So it's a very crucial level, and
Yeah, and we
look
saw
at it.
bounce from there.
We saw bounce from that from 2016 level. Okay,
Yeah.
and what we said initially that this commodities they have already started going up. This is the
Trend line. So
this
if you were going to see a trend line, this trend line, which was created in 2011
end.
August, actually in 2016 is this
11, that is
yeah
17.
November
Yeah, at the
November.
end.
Yeah, at the end of 2016 is when they broke past this trend line That means that the downtrend is
over, and we have seen first move of copper.
of the copper in
Correct.
its uptrend.
Correct.
Yeah.
So it is a technical thing. Okay. Yes,
Yeah.
we will discuss about economy more, but all in all, the premise is that with economic boom,
Yeah.
base metal perform. Correct.
Right.
That's the premise. That's why we have discussed this. Now that means the question is if copper is going up, and we will see all charts. Copper,
Yeah.
let's see nickel, let's see zinc.
nickel. Let's see nickel futures.
Yes. Look at that. Look at that.
Yeah, it's bottomed out.
It's bottomed out.
Clearly bottomed out.
And nickel is a curious case. Why? Because wow, Malay is back.
Why did Malia come? Well, Malia is also a curious case.
So nickel again. This is copper. Yeah, here.
Just a minute.
Yes.
Let me just load nickel. If I could get a better chart of nickel.
Yeah, this is a good chart. Yeah, this is MCX, but
Let's take this one.
I think this has a on monthly chart. This has a very clear picture of this. Yeah, this is a good chart because look at this downtrend line. It has broken this downtrend line. Yeah.
It has broken the downtrend again, probably slightly later than copper.
Correct. But it has broken.
Yeah. Oh,
correct.
August 17.
August 17. It was earlier. It was November 16. It is August 17 now. But again, it has made its first move.
And its first move was a doubler.
So here, look at this. From 8,700 to 15,000.
Yeah. If you take the peak of this month,
then it's 16,000.
16,000.
It's double.
It's a doubler.
And in the first move, it has doubled itself.
Yeah.
Think about the total move. Think
Absolutely.
about. So guys, here it has been in the downtrend since 2011. So it has broken 7 years of downtrend.
Yeah, we can at least expect
3.5,
3 years,
3 years ka uptrend.
of an uptrend.
And in business as usual scenario, it will experience 7 years ka uptrend.
Yeah, agreed.
So that's why we have taken commodities. Now, nickel being a very curious case because it has traded below its cost price for at least 5 years.
Right, it has traded below its cost of production.
So they say that cost of production is 650. Obviously, it changes time to time and currency to currency. But here it says that 650 rupees.
Yeah.
Correct.
So let me just load the nickel MCX chart so that you come to know a few more things in that perspective. There we go. This is a nickel MCX chart, and people say that the cost of production is
near
around
650.
650, which is
Let's 650, 700. Let's take that zone.
Yeah, let's put a line there.
$700 to 650. Yeah.
Yeah, thereabouts. Now we saw that it has dipped below its cost of production, then gone back above it. Again, it had a dip below it. It stayed in this horrible zone for probably 2015
to 17. 2 years.
17 for 2 years, and thereafter it has gone right up, shot up into a new trend. Not only that, this entire zone is a big consolidation because if you see here is again when it went below its cost of production in 2009.
But we cannot, that's why it's just a barometer. This price range is a barometer because 2009 cost of production inflation.
Obviously, that time the dollar was different, so we don't.
It's just a barometer. But the actual thing is, think about the situation where it is like equity stock which is trading at its book value.
Right.
Kind of a thing, not exact thing, kind of a thing. So think about the likelihood of uptrend in this. Correct?
Yes.
Nickel prices. Huge thing. Again, zinc. Zinc is another amazingly different case study. Why? Because zinc started its
move much
earlier than any base metal.
Yeah.
Okay.
Zinc started off here in
in Jan
January
16,
2016.
9 months before everyone else.
Yeah,
Okay,
and
why?
it broke its trend line in, here we go. Here, July 16.
July.
There we
So
go.
why zinc? Because this is completely due to pollution related aspects of China. Correct? China, because of pollution and its concern, China shut down their various zinc mines, and
Right,
it created a supply pressure in the
right,
market. And because of that, zinc from 160 shoot up towards it shot up about 200,
right,
shot up
right.
about
And that is
200.
again the MCX price of zinc.
Correct.
Yeah,
So earlier, Janak, we used to do spread trading in zinc and lead zinc. Correct.
yeah,
We
yeah,
used to experience minus 15 to plus 15 at the extreme.
yeah,
Normally,
yeah,
we experience 9 plus 9 to minus 9 zone. Correct.
yeah.
In spread. Okay, that is lead minus zinc prices. Okay, but last year,
Lead zinc
though
spread
those
went
who
through
are
the
those
roof.
who are trading lead zinc spread, they faced huge losses last year.
Yeah, they got slaughtered.
They got slaughtered because lead was there at 140 for entire zinc rally of 150 to 200 or 200 above. Okay, and we saw spread moving up towards 40 50 zone. Think about the guys who have sold that spread.
It's
They got
bizarre. It's
slaughtered last
bizarre.
year.
Yeah.
Yes,
And this is the Indian
zinc
chart, by the
prices.
way. Yeah.
Have a look at this. If you consider 100 price, doubled
95,
itself.
it went to 230.
230, and we
Yeah.
were talking about 140 zone of trend line break. Correct.
Yeah. Again, July 16.
July 16.
Yeah.
So that is zinc for you. Okay, and again, think about the situation, guys. Here, since so all of these guys they are moving up from 16,
Right.
correct? That means, and think about this, and from 16 to 18, we haven't seen that much improvement in economic indicators. If we see the world,
Yeah.
okay, in India, yes, there are improvement in economic indicators, but still it's a sinusoidal wave.
Yeah,
So
yeah,
we
yeah.
have performed from 6.1 to 6.6 to 7.7. So we
Yeah.
have performed worst also and best also. But
Yeah.
still, the commodities are going up. The question is why? What is the
Uh,
possible reason behind that?
One reason is obviously the upcoming election.
Election, and before that, demand. That means there is a demand. Let me tell you, there is a demand for
Right. Prior to that, I think I will have to share the Internet Explorer with you. Right now, they can see our faces.
Okay.
Just a minute. Uh, we are new
Yeah.
to this YouTube thing.
Yes, that is it.
That's the one.
Yes.
Right. Oh wow. This
Yeah.
this guy loaded
Explorer.
the old Bloomberg. Wow,
Wow.
I love this. So if you were to see a 5-year time frame, okay, yeah, this is your Baltic Dry Index for you.
Yes. And I will look at this. We have seen this Zinc to perform from 1st of 2016, correct? Have a look at this. In Baltic Dry Index,
February
actually
2016.
16, we have seen uptrend in Baltic Dry Index.
Right.
And this is the same time when all the commodities, they started bottoming out one by one.
Yeah, so the idea is that the Baltic Dry Index is a leading indicator of the economy,
Economy.
right? So as the Baltic Dry Index starts recovering, going up, the economic recovery across the world also starts picking up pace.
Definitely, correct?
Yeah.
Correct. So that's the thing. Have a look at this, guys. It has bottomed out. Okay, it has bottomed out. Now it has given small. It is in consolidation zone right now. Correct. Now
Yeah.
what we have to see, the major thing is it has not broken the previous low,
Yeah,
previous
it's made
major
a
low.
made a higher low out here,
Correct.
which is in this month.
The month is
Uh,
April.
yeah, in April it has made a higher low.
Correct. And this is the consolidation zone. Now it will be here for some time. Correct.
For some time, giving us the chance to buy all of these metals at a good price.
Correct. And we are not saying buy now, or we are not giving you investment point. Correct. What we are telling you, we are giving you rationale that in next 3 to 4 years you may see explosive move in
In
commodities.
commodities, yeah,
Okay.
absolutely.
So this is second example, guys.
Right.
Whenever it Baltic Dry Index crosses this point, okay, this is
Yeah.
1626,
That I think is when the global economy,
will uh, bottom out altogether.
all the
Correct?
economies should be bottoming out and performing like the
Performing.
major ones, or there
Yes.
should be some economy which is taking the lead, like China took
Like
the
China
lead.
in 913.
Yeah, and
Correct?
others would just be performing to their whatever levels,
Yes.
average levels.
At
Yeah.
this point, let's see all the GDP growths and GDP numbers.
All right.
Correct.
So
GDP growth and numbers, they are not complete indicator, but they are primary indicator for analysis.
yes, so
Okay.
we have put together this uh,
Small
few
PPT.
few GDP numbers for you. There we go. Starting with
So
China.
just
Yeah,
this
we
mode,
can make
presentation
this
mode.
presentation mode. Yeah, although we'll have to share this mode.
Yeah. So yes, so what we are going to see now, that first thing first, that we have seen that there is a stockpiling happening, demand is there, correct, from the consumers. Consumer means industry side.
Right.
Okay. Second thing is Baltic Dry Index is going up. That means that demand is legit. It's
Yeah.
not that it's because of some particular
Sporadic thing.
sporadic change
Yeah.
is not there. So Baltic Dry Index is sustaining at its higher level.
Yeah.
Correct. That means something is going
It's
on.
inching forward. Yeah.
Correct. Now, what we need to find out whether this is sustainable beyond this point.
Right.
Correct.
Right.
Or from which country the global growth.
Where
will
is
drive.
the demand, major demand, going to come from?
Correct. Correct. So yeah, let's talk about this. China.
So yeah, we are seeing China, which is growing at around 7%
Yes,
approx on an
between
average.
6.6 is the normal range for the China.
Yeah.
So if we see for China, 6.6 is the bad thing. But if you see, we talked about
From a
2012.
Chinese perspective, yeah,
it's a bad
slow.
thing.
Yeah.
Pathetic thing. But have a look at this from 2012. It has been below 8. Okay.
Right.
And currently it's flat.
It's flat.
It's flat.
And you will see the same thing here.
Yeah, this is absolute GDP, correct?
This is a GDP of
This is
China.
absolute GDP somewhere around $11.8 trillion.
Right.
Okay.
Yeah.
So this is flattening out. The good point is it is not dipping.
Yeah, it's not dipping, and chances of it dipping are also bleak.
The thing is, China, from 12 to 18, the 6 good years of economic consolidation.
Right.
It's a very good time for consolidate your economy.
Yeah.
And now they have shifted towards consumer based economy, shifting towards
Yeah.
consumer based
They are
economy.
shifting their stance.
Correct. That means it will give them some result. Again,
Yeah.
it has not bottomed out, but China being China, it is not necessary for China to increase internal consumption.
Right.
Correct. That means if there is a consumption from outside, China is still a world's factory.
It's still the factory of the world.
Correct. So we'll see. We'll see. So that means we have to look at GDPs of other countries also.
Right.
Okay?
So we can safely say that it will not underperform major economies of the world. Yeah.
So the thing is, 6.6 is the barometer for China now.
Right.
It will hover around that area.
Yeah.
Okay. It will hover around that area.
Yeah.
Now, yeah, let's move forward.
So now we'll have a look at EU. Okay, this has been the EU GDP growth rate.
So,
We saw a
sorry,
majorly
but one point we forgot to discuss
about
trade
China?
war. Trade war.
Trade war. Yeah.
Correct. So people are saying various things. People are discussing various things. In the first installment, Trump uh, made his first move.
Yeah.
And then China made their first move. At that time, everyone thought that it will be a superficial thing. Now again, Trump and China, they have made their second move.
Right.
Correct? People are saying it may get worse because with Trump, no one knows what is going to happen.
Right.
But our view is that the money rollers' view is that is not nothing is going to happen.
It's a non-event.
It's going to be a non-event.
Primarily, it's because one reason is that as you just mentioned that China has changed its stance to become a consumer.
Yeah, for
nation.
internal consumption.
Right. So and this stance shift has happened, I think, 2 years back.
Yes, 2015,
Right, so
16 zone.
Yeah, so they are already 2.5 years into this new stance which they are
Correct.
doing, and that's when the protectionist policies of Trump have happened. So I think that China will save itself.
They will save itself, and apart from that, that thing we
Dialogue
were
by
discussing.
Jinping, yeah.
The thing which we discussed, I think 2 weeks back, that this entire trade war is actually not a trade war. It is a fight for
intellectual property rights.
Property rights. So this trade war is not a trade war. They
So-
want to control intellectual property rights
of
both
the
of
world,
them.
yeah.
Yes.
And China has been overstepping its lines pretty often for a lot of IPRs of the US.
Definitely, and so too, US has their own side.
Yeah,
Correct?
and given the fact that it is the factory of the world, it is the one who can misuse it the most. So
Correct. So it's all about intellectual property rights. That's why we think that there will be some middle ground, and it will not hit as much as people are discussing right now.
yeah,
Correct?
agreed.
So that is also a point in this, that China will be near its barometer.
Not
6.6.
only that, Jinping made a statement last week, which says that we will open our doors to more and more economies. So
Definitely.
obviously, China is trying to get
Diversified.
itself diversified.
Perfect,
Yeah, pretty
perfect.
much.
They want to diversify.
Yeah,
Perfect.
and
Definitely.
if I was China, I would do the same thing.
Definitely. So today itself, I think today was Asian Bank Summit was
AIIB
there.
summit,
AIIB Summit was there, and this AIIB, they are attracting lot of countries. Okay, a
Yeah.
lot of countries which were betrayed
Developing
by
or
IMF and World
underdeveloped,
Bank.
yeah.
Correct.
Yeah.
Because whatever you say, IMF and World Bank, they are controlled by European and US economies.
US alone, in fact.
Actually US, but
primarily.
NATO. Like that. So that's why AIIB happened. So that is also one step by China to invite various countries.
Of course. And
Correct?
even globally, Asia is being seen as a
Next.
very next
Thing.
big investment destination. Like,
Yes.
I don't know why it's the next, but it
It
is the
investment
current investment destination.
destination.
I think next would be Africa.
Next should be Africa.
Yeah.
Yeah, that's
Right.
why China 6.6 parameter.
Yeah.
That is our view, correct? When we are giving you our view, we are not thinking about next 2 quarters. Okay, we are thinking of rather next
2,
to 3 years,
3 years.
because
Yeah.
in quarter or two it may
Yeah,
perform
it will fluctuate,
sporadically.
underperform
Correct.
anything.
Yeah,
Yeah.
yeah. We are talking about 2 to 3 years.
Yeah.
GDP growth EU. Yes,
Yeah. EU. Now, EU is also in a very different state right now
different state.
after the taper, right?
They tapered, correct.
Yeah.
And the great part was the first quarter of 2018 everybody showed humongous growth,
Right.
and the second quarter they fizzled out,
Right.
everyone, even
Right.
EU, even
Yeah.
Germany, they
Everyone
fizzled
fizzle
out.
out. Yeah.
Yes, they fizzled out. So I don't know about EU. EU is a very
I'm hopeful about EU. Yeah,
hopeful.
because
But
the
are you looking at any concrete picture that if this happens, they will go up, something like that? That's why I'm very much confused about you.
so the game in EU is that again it is a very skewed economy because again we've got Germany, France, 2 or 3 countries which are very big,
Performing good.
which are biggies, and if they perform well, they can actually
Take you up.
take this chart up. And with the taper, I think the biggest benefactor of the taper is going to be Germany,
Hmm.
right? Because they are the ones who have been actually funding this entire bonds of
Thing.
other countries, the ECB bonds, etc. They are the primary funders. I think UK also was a part of it.
Let's see. I'm in my personal opinion confused. Let's see. Let's see. But confused. Not is not. It's not that I don't think they will go up. I'm not able to look at how. It may be because of my less information also.
Ah,
But
that is fine. That
how?
is fine. So
How?
we agree to differ on this one
Yes.
because another thing that is making me interested in the
Correct.
EU is this part where the last
Uptrend.
uh,
From 16 or
yeah,
even. Yeah.
2016 it has bottomed out. It has again peaked in 2018, 2017 end.
It is. It will. You will not see over here because it's
Yeah,
a huge
right.
50 years chart. Yeah.
Right. So again, it has started dipping now, but I'm hopeful that it will continue.
The only thing which is a positive in my mind is that Germany, they posted number which was better in last, I think, 5 to 6 years, GDP growth number,
Right.
and that was a huge thing. But it
Hmm.
was fizzled down by second quarter numbers. Now we need to look at third quarter. If third quarter is again is
It's
going
good,
up, then it will
and
sustain,
it
I
will be
guess.
those 1, 2 countries which will actually pull this entire chart up.
Chart,
Actually,
but
it's a skewed statistic.
correct. The major hampering point over here will be what's going to happen Italy, what's going to happen in small countries, and whether it will
Whether
remain
they will
intact.
survive the taper.
Again, yeah, whether they will survive the taper is also a
Yeah.
bigger concern over here. So from EU's perspective, there are a lot of ifs and buts.
Yeah,
But still,
agreed.
this chart
But
is
I'm
showing.
still hopeful.
Yes. India. Yes, India.
So this is your Indian GDP as recent stats suggest that it has gone to 7.7 levels.
Which
Okay.
is good,
Yeah,
which
it's
is
good.
good in terms of numbers. We are fastest growing country in the world, but in reality, we in from the industry perspective, we are facing kind of a consolidation to downtrend. That's
Yeah,
a
we are
reality,
facing a
correct?
consolidation. A lot of that is to be attributed to the domestic, that GDP, GST, which got
GST,
yeah,
monetization, everything. So after
devaluation.
2016,
So
actually, we are in a look at this. 2016, we were in a
yeah, we were in a
downtrend.
limbo. We hit a
Yes,
low of 5.6.
yes, that was a very bad number.
Yeah, that was a bad
Worst in
number.
this
Yeah.
to after 2014, I guess.
Right.
Yeah, worst in 2000. Yeah, yeah, yeah. Worst since 2014. Look at this. Worst in 2014. That
Yeah.
was a huge thing. So the the positive picture over here is that
Um,
our
with
programs,
our programs.
program policies, programs
Right,
means
right.
infrastructure push, even in this bad, so-called bad time. So-called means it is not we are not looking that in numbers, but in industry perspective, in credit perspective, it is a kind of a dry time, correct?
Yeah, it is a dry time, and a lot of the blame goes to the GST.
GST,
We
yes.
cannot understate that
No, GST is
because it is a
yes,
mop of around 1 lakh crore rupees every month.
every month, correct.
So, in an economy which is valued at 135 lakh crores or 140 lakh crores, you are having 12 lakh crores which is being sucked out just because of the GST.
GST, correct. And yes, and during that time, still our government still have a headroom to pump in huge amount of money in the economy, be it infrastructure
Yeah,
or
yeah.
other projects. The thing is, this government has only 1 year.
It has 1 year. It will promise a lot of infrastructural projects for
Correct,
sure.
correct.
And
There are especially road projects. They are going on a rapid space all over the country.
yeah, road power.
Road power is going on,
Yeah.
correct. And
Others should pick up pace. Railway should pick up pace. Not only that, lot has been said about Sagarmala, the ports.
yes,
We've
the
not
program is very
seen
good.
much
We have not
movement on
seen
those
any
fronts.
movement from
The
that.
ports, the river cleaning, the linkages of rivers, the
Policies are good, but I don't know
many
investment.
things are in implementation, which haven't seen implementation.
The important point is that let's talk about scenarios of 19. Okay,
Right.
so the common notion is 90% of the time BJP will come in power. 95%. Let's
Right.
take 95%. That's a common notion. But there is now increasing interest that there may be a coalition government.
Correct.
Okay. In both the cases, if BJP comes into the power, they have huge number of lingering projects,
Right.
correct? And nowadays, no one talks about smart cities. Think about 14, 15.
yes.
Everyone was talking. All MBA guys, all newspapers, they were talking about smart cities.
Yeah,
Why
now that is on
infrastructure
the
push will be
backburner.
there? Smart cities.
Yeah.
Why anything will be there? Smart cities. Why India will go up? Smart cities. Now no one is talking about. Think about a situation if BJP again comes into power, they will first push forward the projects which they have promised in
Correct.
this term. Correct.
Yeah.
So there will be infrastructural push.
Yeah.
Let's talk about situations when BJP is not there.
Right.
Even at that time also, the new government, they will carry forward whatever is there on the plate.
Right.
Whatever policies, whatever projects which are in
Already
transit,
begun.
yes.
Yeah, they will be completed for sure, and then they will come up with their set of new projects.
There's new projects. Apart from that, we always take loan from World Banks, IMFs for these infrastructural projects.
Right.
Correct. That means they have to complete. Correct.
Some accountability is
Yes, they
required.
have to complete it. Correct. And then they will have their own different agendas and this thing.
Absolutely.
All in all,
Another angle which I want to discuss before this is that if you want to see from an economic perspective, okay, the Indian company's perspective, we saw a big IPO phase which just
Yes.
went by a year back. Or
And-
year and a half, 2 years back.
and last 6 months it was
Again,
Dry
the
out phase.
IPOs have dried out. Now, when do IPOs start coming out in an economy? What stage of the economy is going on when IPOs come out?
economy of markets.
Economy.
Economy boom phase means fast.
Yeah, correct. So you have that initial phase of economic
Taxes
recovery,
done, yes.
where the inventories are piled up and
Correct.
your economy is just recovering from recession.
Correct.
Then, as the recovery
Things are going up,
picks up
picks
pace,
up.
your inventory gets cleared out, your production starts going up. Then, as your production levels start
Started
going
increasing.
further, your raw material demand kicks in. That's where we saw.
we are in.
That's
Correct.
where we saw 2016-17, where commodity demand started up. Okay.
At the same time, we see job improvement.
Job improvement.
Now that's the
and-
point we are yet to be seen in India also and abroad also. Since there is a lot of confusion about data.
Yeah.
So the thing is, if you see some kind of job improvement, broad-based job
taking
improvement,
place. Yeah.
you should be sure that whatever we are discussing is going to happen.
Right.
Correct? Now, yes,
Absolutely.
please continue.
Absolutely. So once
Job
the
will improve,
jobs improve, your
huh?
economy recovery takes place, jobs improve, people get more spending capacity, your inflation starts inching
Kicking
upwards.
in, correct.
Yeah. And that's when you actually have this phase where
People
companies
have money,
are running at 100%
production level.
production levels, and then they are like, boss, we want to expand.
We want to expand and we don't want to take loan because already,
Of course.
yes,
Yeah.
definitely.
So with the inflation rising,
And already they are at peak, correct? They are putting forward good results week,
yeah,
quarter after quarter
their
out,
earnings are improving, of
improving.
course.
That is the right time to get away your
Actually
stocks.
do some new capex,
Capex,
right?
correct.
So when they do new capex, you will see this phase where a lot of IPOs come in the economy. We in India are past that stage right now.
First
Okay,
phase,
the first phase
yes,
where a lot of IPOs actually came in.
correct.
Okay, a lot of them were IT also. A lot of them were service sector
All
IPOs,
we have
but
seen
we did
different
see
sectors also
logistics and
in
manufacturing
that
also
quantum.
forming a part of these IPOs. So then,
So in the next phase, the first part is the second part is the already existing investor. They also look for exit in the higher valuation phase.
agreed.
And since we are past that first phase, now we are entering into maybe second IPO boom phase, which will be there in I think post 19, I guess.
Yeah, post 19. But in the middle, you will see that all these companies which are undertaking a capacity expansion,
Mhm.
they are going to require even more raw materials.
Yes, they will require because already correct. They will require more
Yeah,
raw
and that
materials.
is where this entire commodity
Boom
picture
will
comes
pick
into the
up.
picture. Yeah.
Perfect, perfect. At that time,
Yeah, that's where the pricing power of commodity producers goes up.
perfect, correct. So India, all in all, there will be huge demand.
Yeah. So from the Indian perspective, we
That
are
is
very
everything
clear
looks
that
correct.
the demand is going to be there. If you have a look at the Indian GDP,
So now let's talk about
yeah,
negative pointers, one or two. The
yeah,
first big negative pointers means there will be negative pointers
a
still
few dampeners,
for
yeah,
next 2 quarters at least. There will be
yeah,
few dampeners. First will be bond yield.
interest rates,
Interest rate
yeah,
8% is
it's
huge.
huge, it's bizarre,
It's complete
yeah,
mismatch right now. Okay, and it can be like this for next quarter, 2 to 3 quarters,
agreed.
because in world interest rates are in a complete different
Yeah,
zone
globally also people are increasing the interest
because
rates.
of unwinding.
Yeah,
It is there, so we may see this mismatch, and because of this there may be a slowdown in this cycle.
right.
But if you see 2 to 3 year 4 year time zone, then whatever we have discussed just that will happen, correct?
Yeah,
It should
it
happen.
will happen. Yeah,
It
it
should
should
happen.
happen
It should
unless
happen.
something goes drastically
Tremendously
wrong. Yeah.
wrong, but no one
Yeah,
can
I don't
predict
see that
that.
happening
No one can
because
predict that.
whatever had to go wrong with banks seems to have already
They
gone
have
wrong.
passed
And
that and they are successfully unwinding it
yeah.
currently.
Another thing that could actually be a dampener is the credit given out by banks. It should improve by a large margin to sustain this capacity growth which is taking place. Will we see that? I don't know. It's a question which only time will answer.
Time will answer that,
It has
but
improved over the last few months, but not to
government
that
will do
extent.
something, I guess.
Yeah.
The way they are meeting nowadays every
They will
Friday.
do something. They will obviously bail the banks out of this, but
Definitely.
I don't know how fast, what will be the rate of infusing credit in the economy.
So on this point, we are going to have PSU banks
We are
talk.
going to have a
We will
talk on
talk
that. Yeah.
over there.
Yeah.
But one more thing, NBFCs. So whatever business these banks are losing, NBFC
NBFCs
are
are
capturing
making
that
the
piece.
most of it at
Correct.
very high interest
Very
rates.
high
So
interest rate.
again, it becomes bizarre
Bizarre
beyond a
for,
certain point
yeah.
to take loans
So
from
that is a
them.
dampener.
Yeah,
All in all,
it's a
that is a
dampener.
dampener.
It's a dampener. It needs to go at this pace. Otherwise, you will see a lesser pace
So that
for
means we
the
need to see government-backed investment cycle again.
yeah.
Okay, okay. So that's India for you guys.
That's India
Okay?
for you.
So for India, the demand will be there. Okay.
Right.
For again China, it is possibility. Next.
Yeah. Next one
Brazil is
is
done. No need to
Brazil.
discuss about Brazil. They are in complete disarray. No, it will take time because it's a chaos over there right now.
Yeah, it's a
Prime Minister,
political and
President,
everything.
they are in jail
Yeah.
and the problems are there. So we'll not talk about Brazil right now.
Right,
No
and
need
they
to.
are
Near zero.
almost near zero.
Yes.
Yeah. Australia
again, commodity backed country.
strong commodity producer.
Commodity producer. So next point is, if you want to see total thing, okay, again look at this, commodity back from 2002 to 2008, then
Yeah.
dip, and then
Dip.
China back thing.
Yeah.
Okay.
So again, if the commodity situation improves, that's when the Australian situation.
So if you
will
want
improve.
confirmation
Yeah.
that whether it is happening or not, beyond
Right.
just go and look at Australian GDP
Numbers, yeah.
GDP
Yeah.
numbers. If they are improving, that means that's it.
Currently, you can see that they are in a range.
Yeah, near one.
Yeah, near one.
Nothing. Okay.
Nothing. Yeah.
Yes.
So, Japan.
Japan. Surprisingly, Japan also showed positive numbers.
This
on
is
first
resilient,
quarter.
yeah.
Yeah.
This is
Surprisingly.
resilience, yeah. Uh,
So
we'll have a session
we'll have
on
a Japan
Japan,
session. Yes, we will have a
Japanification and
Japan
all,
session.
yeah.
And Japan is an
Economics.
exporter. Japan is an exporter.
Right,
Uh,
right.
Electronics, yeah, they are exporters. So let's see Japan. So here, post 2016, again we have seen a small uptick in Japan. This is this is what? This is GDP.
This is the
absolute GDP.
yeah,
Okay,
and this is the growth number,
growth.
which
That's the
again
problem.
has been in doldrums
Yeah.
over the last few months.
So last quarter again, after surprising up move, okay,
Yeah.
in the first quarter, the second quarter was abysmal in Japan.
This is common for most
Almost all the Western
developed
countries.
economies.
Yeah, all developed
Yeah.
economies. Why? Don't know. Why suddenly they are all showing good and then sex? I don't know. Really don't know.
Okay. So apart from this, I have got a few more of charts just for
Reference.
this thing reference. There is a commodity Saudi Arabia chart.
Saudi, I think you have US ka thing.
Yeah, let me just share the right thing here. I've got US also.
Yo.
Yeah,
Yeah, this one.
this is the one I want to show you. Let's have a look at
United.
yeah, US GDP. There we go. Okay. We have got a Windows problem where this chart is
Yeah. Photos.
photo viewer. Yeah, this is the one.
Yeah.
Yeah, now I need to put this on to sorry for this.
Yeah, this
There
one.
we go.
So nothing can be seen in this because it's
Yeah,
70 years data.
yeah, it's just a weird straight line. Yeah.
Yeah. But growth. Let's talk about growth.
Yeah. This is the growth.
Yeah, this is a growth, and post 16. Look at this. From near zero, it is around about
it's
2.5.
slightly improving.
Slightly improving.
Yes.
It's 2.5. Okay.
Yes.
And entire cycle is, so the thing is, post 16, slowly they are showing good numbers, but US numbers, they are adjusted by seasonalities and all. The real, more than GDP numbers, I think we should look at US result pattern,
Right,
quarterly result
right.
pattern. Okay, so in this term, okay, first and second quarter, because of tax leeway,
Yeah.
all of them showed good
Everyone
result.
gave good results.
Now, real question is what happened in third quarter and fourth quarter.
Yeah, that
Okay.
will be the key.
That will be the key. At that time, if they sustain good numbers, then we have to say that we will see good demand from US side.
Right. But if you are seeing from a commodity perspective, you obviously are not expecting this to improve by a big margin.
What?
But the US GDP growth rate,
So,
but
consumption,
consumption,
their entire consumption story, correct? So if they have a good GDP,
stable GDP, if they have a stable growth rate even of the GDP, I think it should be okay for the
yeah,
commodity.
it should be okay. But at that time, there should be increase in jobs and wages.
Right,
If that is
right.
there, then there will be a
Yeah. So when we talk about economic growth rate, obviously we'll see that.
we'll see that. Yes, definitely. From specifically US perspective.
Yeah.
Specifically US perspective.
I just so the idea is that the call we are taking here is that this shouldn't be a dampener now anytime. It should just support the commodity boom.
And the critical part, dampener can be, I think they have withstand the bad phase.
Yeah,
So think
yeah.
about this: 2015 2.25 interest rate.
Right. The
Correct.
taper began eventually.
Yes, taper in 2015 they have ended with the QE and they started with increasing interest rate.
Correct.
Correct. So at that time, December 15, it was 0.25, I guess. Yes, 0.25.
Yeah.
So from there, they have reached to today's point. And from here, now they want to reach 3%.
Right.
They are almost crossed the 50% zone.
Yeah.
Correct. They are at 2 now.
Right.
Correct, 2. They are at 2, and during that time they have shown a small improvement in GDP. Okay, now there are a lot of questions that this is adjusted,
Yeah,
this
it's
is
rigged and all now.
manipulated,
That's a endless debate.
but still the main thing is from 2 to 3. From 2 to 3, how they are going to behave is the major question. Okay, but whatever we are seeing, if from 0 to 2, from 0 to 2, it's the worst part.
It's the worst part. They have
If they are increasing,
yeah, they have seen the worst.
yes. Now dampeners. Okay, this is a positive side that
Right.
from 0 to 2 they have shown GDP growth. So it is better from 2 to 3.
Right.
The dampener can be, the thing is, due to their QE program and asset QE program and huge bond, they have created huge bubbles in everywhere.
Right.
Be it equities market, bubbles means higher price zones.
Yeah, lot
Be
of
it equities,
investments.
be it bonds, they have created these bubbles. Okay. The only dampener is that during that 2 to 3 zone,
Yeah.
there should not be major hiccup in any of the market.
Global
Otherwise,
markets.
global markets, yeah, in their equities and bond market. Otherwise, what will happen? That hiccup will translate into that enter into economy.
A recession,
It may happen. It may happen.
It can happen.
That is the biggest dampener for entire world. That is the
yeah,
biggest
because
dampener.
as we said, India also had a lot of foreign investment flowing in.
Yes, definitely. That's the biggest dampener.
Right. But on that, to counter that, US itself has taken a measure like the reduction in tax which
Tax
Trump
rates, definitely.
Okay, so Trump is and the hiking of interest rate. So somewhere US is saying that okay, if you are not investing in emerging markets, come and invest in my market.
Come and invest, or more than come and invest, they needed that money. I don't know whether they will invest. I don't know whether Apple, they will, they are going to bring back their entire profit in US. That's
Of course,
for sure.
of course.
But I'm not sure whether they will start factory in US. Getting it?
Yeah, I get that.
So they wanted that buffer for all the companies.
They had to get the money back somehow.
They had to get the money back.
Right.
Otherwise, it will be a bloodbath.
Yeah, of
Correct,
course.
because
So-
interest rate, if you are increasing in 3 years, if you are increasing interest rate from 0 to 3,
Right.
and at that level of debt for each individual companies, they have to produce some buffer or liquidity to companies to repay that debt or interest. Correct.
Agreed.
And that's why they are creating this thing. The biggest point is that was a very difficult task, and currently from 0 to 2, they have withstood that thing.
They have withstood.
They have withstood that thing. The major question is from 2 to 3. What will happen from 2 to 3?
Yeah.
That's the biggest thing. Is there any other point?
No, just that I'll keep an eye open for the
US.
investments taking place in the US.
US.
We
Okay,
saw
okay,
news today
okay.
of how Jindal is planning to invest in the
Okay,
US
okay,
also.
okay. Correct. So you are
So-
saying that it may happen that there will be a
Yeah, they will. If you look from a positive negative perspective, they had a negative investment cycle where
Definitely.
a lot of investment flew out of the US. And to reverse that, they need to create a positive investment cycle.
which sectors can be varied, correct?
Yeah, correct. So I don't know how it will
How?
pan out, but I will keep an eye out
Eye
for
on
that.
that,
Yeah.
correct. One of your theory was about pharma, correct?
Right.
Yeah. So share that theory with them.
So for pharma also, a lot of uh, manufacturers are outside the US. Okay, now pharma incidentally is a sector which is not very labor centric sector.
Nowadays, definitely not.
Definitely not. So US can actually attract a lot of pharma companies which can make their base in the US if they provide the right incentives to them.
Correct. It may be
So
possible.
even
It's a
electronics,
possibility.
even electronics.
Electronics for for electronics
For
manufacturing.
microprocessors and all, for the my small microchips and nanotechnology based electronic
Okay,
market can
okay.
go there.
So for the high end thing where they have to create from the scratch, they may start
Yeah,
the
the
thing
one which is not very labor intensive, one where your IPR is getting protected.
protected.
Yeah,
Correct.
even pharma, even electronic, nano, all these are very high IPR things.
Okay, okay, getting it. We'll need to
Yeah, we'll
we'll
need
need to
to
research it bit
maybe
more.
research it
Correct.
more
Yeah,
and
we'll
keep an
need to
eye out
research
for
it bit
that.
more.
Yeah,
But this is a very carefully traded zone for US,
right.
and they have done well till now. So people say bankers and everyone, they have done. This is a
Whoever
professional.
has done it
This is a
has done a
professional
good job.
accolade. However bad they are, but they have done well till now.
Agreed, agreed. Yeah.
Yeah,
So,
yeah, done. Saudi Arabia, we will talk in Aramco thing.
yeah, I think that's the only
That's the
one
thing.
that we've got here, Saudi GDP. Yeah. So, one more thing which I want to share here was this.
Okay, okay, good one, good
Yeah.
one. What is this?
The Korean
I'll
giant
zoom up.
POSCO.
I'll zoom a bit, a bit.
Yeah. This is the outlook of the steel market given by the Korean giant POSCO
Oh,
just 2 months back,
wow.
right? And they have also priced in the trade war situation,
Okay, okay,
and they have also priced everything. And this is what they say that firstly, global steel demand forecast to increase by 1.8% because of emerging markets. US and developed countries will show around 2% range demand growth. Okay. In India, there was a soft demand in India and Southeast Asian countries due to economic reform.
okay.
Again,
Definitely.
GST and all those
Mm-hmm.
things is expected to
Turn
turn to be
around.
growing to a 5 to
5, 6%.
6% expansion or infra investment in
Okay,
18.
okay.
Okay, now POSCO is saying this.
Costco is saying this, they know their business, but apart from that, they also play for the investors. But
Right.
all in all, what we can take it from here that there is no cautious note or there is no, they are
The,
not at fence. They are saying that
for this, but for China, they are saying that it's gonna stagnate.
it got to stagnant. Okay.
Right. So here they are saying that steel price will be stable. There won't be any growth. And here they are saying steel demand in 17 was strong, driven by increased infra investment. And reduced measures to boost economy and slow recovery of demand will stagnate the growth in it.
Okay, they will consolidate
So
in
the
18.
price will be leveled out there. It will not play
In
a tap.
China.
No?
In
Yeah,
China.
and our view is similar that gonna play at around 6.6 the
6.6
GDP.
for
Yeah.
level. Okay. So this is from POSCO.
Yeah.
Okay, they are also saying the same thing. Interesting. Interesting. Yeah,
Yeah.
that's it. That's it. So, uh, anything else to discuss? Gold?
Yeah. Let's discuss silver.
Let's discuss silver. Yeah, let's talk. See silver chart. So silver is a commodity, guys. It's said to be a precious metal, but due to economic advancements, not economic, technological advancement, see, silver is kind of industrial metal also. Correct?
Right.
Silver is industrial metal because uh, in the new technologies they use silver in chips even.
Yeah.
Correct? They
Silver
use
is used in electronics.
electronics,
Yeah.
electronic chips. Silver is used, so that's why it's an industrial metal also. And if we see, we are in industrial revolution 3.0 or whatever, we are in next phase of industrial revolution where we see lot of uh,
Uh, changes which are happening
happening.
across industries,
Correct.
especially the
Everywhere.
but one large change is that e-vehicles change, which is
Correct.
going to come in the next few
Correct.
years.
Correct. Over there also there will be huge
Yeah,
application of silver.
of
Correct.
silver. Yeah,
Yes. So all in all, with the improvement and growth of technological sector, and in next few years, everything will be technology. Even
yeah.
mechanical thing will be technology. No, that is also a technology, but tech field. I want to say, because everything will be interrelated with networks, henceforth,
Yeah, with artificial
and
intelligence
yes,
and
everything,
robots and everything.
everything. So silver is going to. So this is a heyday for silver. Okay, now let's talk about good part of silver. Then we will talk about practical fighting war like scenario of silver.
Right
Silver. Let's talk about good part of silver. Analysis part.
there. This is the monthly chart of silver. And the internet is acting up.
Yo,
Yeah.
look at, yes,
Oh,
look at that guy. This
look
is a
at this
beast.
rocket.
Look at this rocket.
Everyone wants to sit in this rocket.
Yes. Look at
This,
that
yeah,
rocket.
that's like the rocket to the moon.
So this was $18, correct? This was 18. This was 18, and with 1, 2, 3, 4, 5, 6, 7, 8, 9 months, from 18 to 48
In 9 months.
in 9 months. So think about, it has risen up 1.5 times, and now 20 times leverage in India.
Oh, 1 is
US
to
is
20.
different zone. US is 4 times bigger than us, correct?
Yeah, their leverage is
Huge.
yeah, crazy.
I don't know the current levels of leverage, but it's at least 4 times bigger than India.
I can't even draw a downtrend line on
There is no.
this.
So it's clear, it's evident, correct?
Yeah, it's very evident.
It's evident. No need to draw downtrend line. It's
Yeah, but
evident.
it's become a dead duck over the
Yes.
last 4 months.
Now the question is, the copper, this gold, it has gone up, correct? In
Right.
India even.
Right,
But silver is still near its bottom.
right.
That's a bigger question. First, we will talk about analysis. So, Janak, tell them your analysis about silver.
So silver is trading in a range. Okay, it is definitely formed. It hit a low of 13.
Correct.
Okay, which was a bad month for silver. Then it went up to 20 levels.
Correct.
Again, it came to 16 levels, and then
It
we
is
are
not breaking 16
seeing that
levels.
it's sustaining at 16
16
levels.
levels.
So people are very happy at 16 right now. Okay, and last 4 months it has not moved at all. It has been 16. Like you get up every day and you still trade at 16. Now we will see a surge in silver if it moves outside this 16 to 17 range.
$17 range when it closes above monthly chart,
Yeah,
above $17.
on a monthly level,
Correct.
we will see a first move, which is obviously $1.5. But I think
No, no,
the
no, no.
bottom will be in
Bottom
place
will
then.
be in place, and
And then
silver may
we'll
move
see
up
a
to,
move
yeah,
first to 20, and then if it goes past 20, then it's going to
48 and
shoot
all
up,
those
and the
things.
rocket will start like this. Like here, this is a good precedence to go by.
Correct.
Yeah, this is the rocket which will start first. Yeah, this was the 2005 rocket.
Yes.
Yeah, then it
Consolidation.
took a breather, then it
It will
fell,
not be
again
the
came.
same, but it will be similar kind of a
Similar,
stuff.
then it'll be again slightly going up, and then boom.
So, guys, in 2000 level, our currency was near 54, 53, 55, I guess.
When?
2011.
11, yeah.
Yes. And at that time, silver hit 75,000.
Yeah.
Now we are at 65, and 65 is like our business as usual rate.
Yeah, we are at 68.
68.
Right now. Yeah.
Yeah, 68. And it's a business as usual
Now,
rate.
yeah, it's assumed to
It's,
be
yeah,
well
normal rate,
discounted everywhere.
correct?
Yeah.
Think about that. We are already 9% up in currency depreciation level, correct?
No more than that.
1 by 6, no,
18%.
16%.
Yeah.
Perfect. 1 by 5, 1 by 20%.
20%. Yeah.
Correct. 20%. We are already 20% depreciated in terms of currency. Think about that when it reaches to So all in all, 75,000 is a very good possibility in
Yeah.
silver, but it will take time. It will 3 4 years.
Yeah, but keep a track on this because the entire cycle is left.
Yes,
Entire cycle is
and
left.
incidentally, gold gold from 24,000 it has hit 31,000. Okay,
Right.
but still silver is not moving out.
It's not. It's
It's
just
not
there.
so look
Just
at
there.
this, guys, look at this. It's not moving out. Good part is, yes, that's a good part. It's near its cyclical low.
Right.
Correct. So if we can extend this to here, we'll get entire cyclical.
Yeah.
Yeah, that is a good thing.
Yeah. This is a
Silver cycles.
silver cycle. Yeah.
So lobes, show them the lobes then.
Every time it comes near this line, okay, out here,
It bounces
it bounces here. So from here it went from $5 to
19, and
$19,
that is
four
four
times.
times. So
And
don't,
here,
yeah,
here it went from $8
$8 to
to
$48, six times,
$48.
6 times.
Right. And now again, if it coincides somewhere in the future at around
$15,
15, $16,
4 times $60.
we'll still see $60 more than the prior high. And
And this is the back of the hand
yeah,
calculation, but all in all, silver thing is there. Okay,
yeah, and technically, this is an accumulation which is going on.
correct. Technically, this is an accumulation.
Someone is accumulating silver at this
So
price.
someone is accumulating silver or someone is offloading silver. So why we are saying this, we will tell you that. But this is a very unusual resting period for silver.
Right, it's very weird.
From 16 and we are at 18. So 2 years. It is resting near 20 to 16 zone.
Yeah, but the fact that it's not going below
Below this,
16
yeah.
makes me feel that it's
That-
an accumulation.
Yes, this is an accumulation
Right.
because it is not breaking its previous lows even.
Yeah,
So it is not going down. It's 50% level. Previous trends 50% level. Now, so look out for 17 level. Whenever it crosses $17, silver
You're
is
in the
yours.
game, yeah.
Okay, silver is yours.
right.
Now, end part. Do you want to discuss anything else about commodities?
No,
No,
now let's
correct.
get to the story.
So
I'm dying to hear the
yes,
story.
so copper. So again check nickel. Nickel is at 11,000.
Right.
Sorry,
1,000.
1,000. Nickel will break its high of 1,400. Definitely.
Right, right.
Copper again will make new highs. Lead, more than zinc, lead is there. Correct. Lead has not given a proper move.
Yeah, let's
Correct.
have a look at
So
MCX lead.
keep close tab on lead even.
In fact, MCX lead is already
It's a high
at a very nice
above
point.
Yes, but look at the consolidation last few.
Yeah, if it
So,
goes above this, we are seeing a territory in lead which has not been explored
completely
before.
different.
Yeah.
Correct. Completely different territory.
Yeah, because this 2016 it made a high of 174 and then 172 levels and not broken past this
Past
level
this level.
ever since.
Yes. Whenever it's going to break this, it will be a
Yeah,
blast.
and it's very close to breaking.
It's very
like
close. to
Pretty
breaking
there,
that.
yeah.
Yes. So lead is going to go up. We are not saying buy at this price.
No, wait and watch and do your
own studies.
build your strategies
Yes.
and then trade.
What we are saying, that cycle has changed.
Right,
That's it.
right. So this is
Zinc
your
is a completely
MCX
different
zinc.
thing.
Now this already ran up.
Yeah.
Yeah. So now this guy will take a rest
And
while lead actually goes up.
Yeah, lead will catch up and this will take
Yeah.
rest.
So that, and let's look at copper, MCX. Again, very interesting level. Now this level was seen in 2013.
And that was due to
China.
currency depreciation and China.
Right, dollar and China.
Correct.
Rupee depreciation.
depreciation.
And China. If it closes above 488, again something
Explosive
fun.
move. Explosive move.
Although looking at this chart, the way it has moved in this month itself,
It will be a
I
kind
don't
of a.
think it will happen anytime soon.
So think about the Baltic Dry Index also. It is also consolidating.
Yeah, Baltic Dry is also going
Consolidating.
down. So I think next 3-4 months will be a sideways to maybe a downward move for all base metals.
Downward to sideways move, but buy at lower levels.
Yeah.
You decide, you study and you decide whatever you want to
And
do.
while we are at it, let's have a look at
Gold.
MCX gold or Comex gold.
Comex gold.
Let's have a look
That-
at Comex gold. Again, it's going down, right?
Yes,
And
Comex is going down.
yeah, it's a very interesting situation.
It's a weird situation, rather interesting. It's a weird situation.
This is going primarily because of the dollar.
Yes.
So this is a static view right now,
The interesting part is that this time around, interesting part that interest rates are going up. Okay, interest
Yeah.
rates are going up,
yeah.
and uh,
So even if it does go down, okay, I'm not really convinced that it will go down beyond a certain level.
This is a consolidation.
Right.
This is a consolidation.
Yeah. So this can be a demand line. This can be a level line to look out for in gold, and then see how it behaves from there.
So-
And if we see a bounce,
So interesting
again
part
the game
that
is
this
on.
time it is perfectly following that inflation interest rate and gold wala scenario.
Yeah.
So to tackle inflation, people buy gold, correct?
Right.
So this time around, inflation is interest rates are going up, so inflation will be okayish.
Okay.
And that's why you may see this kind of move. But in the larger scenario, in the larger perspective, this is this may come to this lower level like this level also 1220,
Yeah.
but still it will be in an uptrend in a larger scenario.
This demand line is there from 2005, and let's see whether it's respected. Most probably it should be.
Let's see, but
Yeah.
all in all the commodities are in uptrend. They have changed their cycle.
Yeah.
So watch out. Now about silver. So every time we give you alternative view, correct? Be it related to diplomacy, be it related to world, be it related to economics. This time around, we have come back with silver. So this is a silver chart, okay? And if we have seen silver, $18 is a very important level for silver. Okay, why $18 is important? Let's check it out.
Let me just put a line there.
Yes, this is $18, and $18 is extremely critical level for silver. Now, whatever we are going to share with you, uh, some part of it we have researched it, some part of it they are views of various
People out there,
analysts,
yeah.
alternative views of various analysts, outspoken analysts. Okay, because there is no correct measure to find out this.
Right.
Okay, but story is interesting. So let's show them our faces. It will be interesting now. 18%
Yeah,
rise, and from last 2 years, silver is trading between 18 to 16 to 20 level. Okay.
Right.
Now, what happened? This is interesting, guys. In what was there in 2008? Subprime crisis.
Subprime crisis.
After Lehman Brothers, which was the famous hedge fund, which made headlines while going down, Bear Stearns.
Bear Stearns.
Correct?
Right.
Bear Stearns. Who saved Bear Stearns? JP Morgan.
Right.
Okay. JP Morgan saved Bear Stearns. Now, earlier also, JP Morgan, HSBC, Goldman Sachs, they were the bigger players in gold and silver.
Right.
They were holding a lot of position in gold and silver. But at that, as you know, each and every broker, banker, they have a position limit in every asset class.
Right.
Correct?
Right.
That you cannot take more than 12% of entire thing.
Absolutely.
You cannot take
There is
something
some
like
regulation.
that. There is some regulation. Otherwise, it will be a market manipulation kind of a thing.
Yeah.
So what happened in 2008? Bear Stearns went down. JP Morgan came forward and they bailed out.
Bear
They,
Stearns. They
acquired
it,
Bear
yeah.
Stearns. But there is a saying there are chatters that against that since JP Morgan helped in some way. In some way, they help US government, they help
Yeah,
SEC, they
of
help
course.
US
Everyone was
economy.
helped by the
They asked for a counter,
uh,
okay, and that counter was that there will be no
limit.
limit for JP Morgan. Why?
Oh,
Because uh, JP Morgan was the biggest. JP Morgan, Goldman Sachs, and HSBC, they were the bigger players.
hmm.
But one between them, there was one more bigger player, and that was Bear Stearns. And
Oh,
Bear Stearns, at that time, they were holding one of the largest short positions in silver. So
oh,
while
Bear
acquiring Bear Stearns, okay, they also inherited all their short
short
positions,
positions.
and in
Oh,
totality they became the largest short position holder in entire market, correct? But
ah,
they were violating their limit rule.
hmm.
And at that time there was a deal between, and this is a saying, I don't have any proof about that deal or anything else, but the thing was that by acquiring
Bear
Bear
Stearns.
Stearns, they violated that limit. But obviously those were the times when economy was in the trouble.
Greater
Who
good,
were
etc.
who
Yeah.
No one was cared.
No one cared about the
They
limit.
didn't care
Yeah.
about that they were violating the rules.
Right.
But the interesting part is post Bear Stearns, HSBC and JP Morgan
Hmm.
together, they were holding 80% of entire short position in the market.
Oh,
80% of entire short position. That
steep.
level set to be at $18. Okay,
Oh,
level set to be at $18. Problem is that even JP Morgan didn't do that for the sake of economy or nation. So if JP Morgan were not there, what would have happened to Bear Stearns' position?
it would have been liquid. Yeah.
Liquidated this short position,
Right.
and that too by bankers.
Right.
And the bankers, they don't look for better short positions. They will not wait for
They will short
1
it
year
on
to
market. Yeah,
unwind.
yeah. They would unwind
They
and
would
there would
have
be a
done
surge.
it
Yeah.
in 1 day.
Right.
That would have created a whole lot of chaos for JP Morgan, Goldman Sachs positions even.
Right.
And that's why JP Morgan came forward.
Oh.
But what happened post that thing, post 2008, it has said that post that even JP Morgan, even today, holds almost 60% of short positions in silver.
Even
Okay?
today.
Even today.
After the fall.
Yes, and have a look. So for this, go on cmegroup.com.
Right.
Okay, but it is available only for paid subscriber. Over there, you will get position in silver with different banks.
Hmm.
Okay, you will see that JP Morgan is holding around about 57% even today.
Wow.
And that's why silver market is not moving beyond that point.
Right.
Apart from that, there is one more chatter that JP Morgan and HSBC, now they are buying silver, physical silver in huge quantity. Okay, physical silver in huge quantity.
Okay.
That's the news.
Okay.
Okay, that's the news. One aspect can be that they are hedging themselves,
Hmm.
correct? Because they are saying it's an uptrend. Now we have to
Verify all
hedge.
this.
But the second point is, if they want to hedge, why they are paying entire money and buying physical quantity?
Right.
They should have gone and bought future.
What futures?
Correct. But they are not
But
doing
that
that.
would square off the short.
That would correct. But they are not doing it. Doing it. Correct. They are buying
Buying
physical.
actual silver.
Correct. Now that's why some people are saying that actually they are not buying it. They are just creating a this news
Yeah.
that
Demand.
they are not net short. They are a buyer in silver. Otherwise, it would have been a bloodbath or a corporate level rivalry. That
Right.
they have that much position, let's cut them off, kind of a thing. So
Correct.
it's a huge
Uh,
conspiracy
Yeah.
and a fight level thing. Let's think about this. If JP Morgan is holding 60% of
Shorts.
whatever position, short,
Short, long, underlying.
Yes. If one company is holding 60% of entire position of silver market thing, and nowadays we talk about no one can manipulate market.
Hmm.
Over here, it's clearly the case that a single entity can manipulate the market.
Yeah.
Correct.
Absolutely.
60% is the entire market.
Yeah, agreed.
Correct.
Agreed.
And if we add HSBC in that, it will be more
It's
than
over.
80%.
It's over. Yeah.
Correct. That means this is a huge, highly unregulated and highly manipulated market. The world silver market. And
Right.
world silver market, that means Indian prices also.
Indian prices are minuscule.
Derived from that world
Right,
prices. Correct. So that's the alternative fact, an interesting fact.
Right.
Let's see what the real case study for
How
us
this
is
entire game will pan out
unwind.
is something that we need to figure out.
Two things you need to do. One, if you can understand how JP Morgan plays, that's it. You don't have to analyze anything.
Yeah.
If you can track out how JP Morgan is doing their stuff, just follow them, do what they do.
Just do what
you
they're
will make
doing.
money.
Yeah. Absolutely.
And second, from academic point of view, from market professional point of view, how they are going to come out of this entire thing.
Yeah.
That will be very interesting.
And what is the entire outlook on this?
That will be
what is the
that will be an immense case study, correct? Even for us to learn from them.
Yeah. Agreed.
Yes.
Agreed.
So that's it, guys. That's it from our side.
Yeah. Hope you guys liked the session.
Correct.
Slightly long session today.
No,
but
actually, we have taken only 1.5 hours. Not a long session.
Shorter than the usual session.
Problem for us that this was our first YouTube live for TMR Talk.
First live talk.
Live talk.
TMR Talk.
Yes.
Yeah.
Earlier we used to.
We went live for the week ahead 2 times, but
not TMR Talk.
Yeah, prior to that we've not gone YouTube
Yeah,
live.
that's it. That's it from our side. Our videos will be there on YouTube.
Yeah, and
for
if
you to refer.
have any questions, comments, doubts, clarifications, please put them in the comments section below.
And this is our open source knowledge sharing platform. So you can share this link with anybody and everyone.
Yeah, and come back next Tuesday for our next session.
Next session, definitely.
Yeah.
And if you are from any institute, organization, corporate, and if you want to get connected with us, if you want to be in association with us for anything,
right.
So please call on our office number.
Or mail us on career@themoneyruler.com.
Definitely.
Yeah, that's it.
That's it from our side, guys.
Bye. Enjoy today's match.
Thank you. Bye.
Bye.